A stocks and shares ISA could be for you if you aren't looking for instant access to your money. You're prepared to keep your money invested for a number of years. Typically, you haven't used your total allowance for the current year, which is £20,000. You're comfortable that the value of your investment could go up as well as down. A stocks and shares ISA is effectively a tax wrapper that can be put around a wide range of different investment products. Any investment growth or interest earned or dividends within the stocks and shares ISA is tax-free. So that is tax-free from income tax and capital gains tax. There are lots of different types of investments that can be held in a stocks and shares ISA. Many of the platforms, especially the online only platforms, allow you to buy a fraction of the shares rather than the whole shares. Just makes it easier for those with slightly less cash to invest. You can invest, as I said, up to $20,000 into an ISA each tax year. The government has said that limit will remain until 2030. As you might know, you can divide your ISA allowance across 4 different types of ISAs. There's cash, stocks and shares ISA, innovative finance, or lifetime ISAs. Your annual allowance expires at the end of each tax year. So that's the 5th of April, and any unused allowances will be lost and can't be rolled over to the following year. You can make lump sum deposits or regular deposits or ad hoc investments and contributions to your ISA throughout the year. Any increase in the value of your stocks and shares within your ISA are free of capital gains. Most income from your stocks and shares ISAs is tax-free. It is worth shopping around for your ISA and find the one that suits you. Compare any charges for the ISA wrapper and the range of investments that you can put inside. Some providers will only offer their products, so make sure you check into that before you start. One key point that often gets confused is your ISA allowance is how much you can actually put in each year as opposed to the total value of your investment. So every year you can put in up to 20,000 and that will compound. So if you earn 1,000 interest in one year, the following year you will start the tax year after filling up the previous year at 21,000. So you'll be able to earn interest or get the growth on that 21,000, and that hasn't impacted your tax-free allowance. We mentioned briefly that you can actually invest in fractional shares. This is a massive innovation and something that has allowed everybody to get involved, whether it's from a single pound all the way up to thousands of pounds. Previously, you had to purchase an entire share. If you take example a share of Berkshire Hathaway Class A shares, they're valued at well over $600,000 per share. I don't know about you, but I can't afford any of those. But what the fractional shares allow you to do is actually buy a fraction of that share. So rather than needing the full $600,000, you can actually purchase £1,000 of that company, which means you would get a tiny amount of that share, which will allow you to build up your position in that company over time slowly and also benefit from the gains that company is having while you're doing so. You can't actually purchase fractional shares on the open market. What you need to do is go through some of the platform providers and the investment platforms. So the one I personally use is Trading 212. It's easy and nice and simple to use. Not all platform holders actually offer fractional shares. So if this is something you're interested in, it is worth doing a bit of research prior to actually investing. Up until November of 2024, you actually couldn't keep fractional shares in your ISA despite many ISA providers actually offering this service. What's happened is the tax rules hadn't changed in alignment with the actual innovation within the ISA space and the investment space. Now they've caught up, and it means any fractional shares that you have already in the ISA are covered, as well as any new ones that you are going to be buying. One of the other things about ISAs is if you have a cash ISA or any other ISA, you might want to actually move that ISA to somewhere. If you want to switch your ISA to a different provider at any time and keep all of your money tax-free, you'll need to transfer the ISA. You can't just close one ISA, withdraw the cash, and then reinvest it elsewhere. How this works is all ISA providers have to allow transfers out, but they don't have to allow transfers in. You can transfer money from a cash ISA to a stocks and shares ISA and vice versa. You can choose how much you want to transfer, so you can do part of your transfer or all of it. Fractional shares can't be transferred in this way though. The only way to change providers where you have fractional shares is to sell those fractional shares and use the money in the pot, as in the cash within the wrapper, to transfer out, and any gains will be tax-free and exempt from capital gains tax. One of the quirks with a stocks and shares ISA is that accessing your money can sometimes be a little bit more complicated because your cash is actually held within shares rather than just readily available cash. You can sell your assets in your ISA at any time, and there's no minimum length of time of holding the stocks. If you have cash in your ISA, you can only reinvest this money into another ISA until your next available allowance. A lot of the providers will offer a service and there will typically be charges. So with Trading 212, they've got a foreign exchange fee, which basically is a small percentage of the amount you're purchasing when you purchase it and when you sell it. So it's something to look out for. Trading 212's exchange fee is only 0.15%, so it's minor really and won't actually impact too much, but it is something to bear in mind. Other providers can charge different fees, so it's important to check what these charges are, as they can actually vary a lot depending on who you're going to and how much money you have. It's really important to actually know what you're being charged, because a small percentage, let's say if they charge an annual fee of 1%, can massively impact your total gains across your lifetime. Many people wonder how safe a stocks and shares ISA is. Is it more or less safe than a cash ISA? The answer is you are covered exactly the same up to 85,000 per person or 170,000 per joint account per institution by the Financial Services Compensation Scheme. It isn't any less safe if the provider were to fail, but there are inherent risks in the stocks and shares that the cash ISA doesn't hold, but there's also benefits to it. Before we get to those, let's have a look at how you actually buy stocks and shares in an ISA. You can buy them directly from an ISA provider. You can get them through a fund manager. You can directly from discount brokers, fund supermarkets or banks, from regulated financial advisors or financial planners, or through online share accounts or stockbrokers. Charges also will vary for the different types, so it's always important to check which is cheapest or which is just easiest, depending on which you prefer. Another key point is tax, which is what you have an ISA for, so you can help protect it from tax. And investments pay interest if you've got government bonds, corporate bonds, etc. Rental income like property, funds, REITs. All the income they provide is 100% tax-free within the ISA. Everyone gets a £500 tax-free dividends allowance. This is on top of your personal allowance, the amount you can earn each year before paying tax. By pension funds or received on shares in an ISA are tax-free, so they won't impact your actual dividend allowance. So this will allow you to have, if you are lucky enough to have hit your ISA limit, extra funds where you can still earn up to £500. Any profit you make when selling your investments in your stocks and shares ISA is free of capital gains tax. On the flip side of that, if you make any losses within your ISA, then you're not actually able to offset that against your capital gains tax on other investments. So that's something to bear in mind if you've got a heavily losing position on any stock. Having a stocks and shares ISA is a great way to purchase stocks and shares, bonds, etc. very safely, very easily, and to maintain interest levels. What I do with my ISA is all my money goes into stocks and shares ISA. I'm using it as essentially a pension pot, hoping that over time my investments will grow. I've invested in various individual companies as well as into things like the S&P 500, where over time that has consistently gone up, and I hope to be able to compound over the next 10, 15, 20 years before I can then look at actually pulling out some of that money. So if you are interested in the long game, a stocks and shares ISA is definitely the way to go. If this video has helped you, please do leave a comment. Let me know if you've filled your ISA this year, how you're getting on, any sort of additional information that you'd like to know. Thanks so much for watching, and bye-bye. Today, we're going to take a leaf out of Doug DeMuro's book and look at the quirks and features of excuse my French.